Bitcoin is back in the spotlight after hitting a 3-month high on Monday, surging past $80,000, extending a strong rally. But new data suggests the surge may not be as solid as it looks. The world's largest cryptocurrency rose 12.7% in April, marking its best monthly performance since April last year and its second straight month of gains. Ether also climbed, gaining 8%, its strongest showing since August. But beneath the surface, analysts warn this rally could be built on shaky ground. According to crypto data firm CryptoQuant, the recent price surge has been driven almost entirely by perpetual futures trading, also known as PUPs, rather than actual buying of Bitcoin in the spot market. Here's why that matters. Spot demand, which reflects real invested buying, remained negative throughout April. Meanwhile, futures demand increased sharply, indicating rising speculative activity. This divergence is a red flag. CryptoQuant's head of research, Julio Moreno, says this kind of setup usually means prices are being pushed up by leverage, not genuine demand. And historically, that doesn't last. In fact, a similar pattern appeared in early 2022, just before the crypto market entered a prolonged downturn. The concern is simple. When prices rise without real buying support, they often fall once leveraged positions unwind. Adding to the uncertainty, crypto markets in 2026 have been heavily influenced by external factors, shifting U.S. interest rate expectations, ongoing geopolitical tensions, including the Iranian conflict, and lack of regulatory clarity, with key legislation like the Clarity Act still stalled. There are some positive signals. $1.9 billion flowed into Bitcoin ETFs in April. Total ETF assets now stand at 105, that is 100.5 billion US dollars. Corporate holders added around 58,000 Bitcoins worth roughly $4.4 billion. But even with that, price action has been inconsistent. After hitting a high of around $79,500 in April, Bitcoin mostly trended lower towards the end of this month. It's currently hovering near $78,000, just about 1% below its recent peak. Bitcoin's rally may look strong on the surface, but without sustained real demand, analysts warn it could be vulnerable to a pullback. Investors will now be watching closely to see whether actual buying catches up or if this rally begins to unwind.